Our traders, U.S. session just opened back up, and Federal Chair Powell is now speaking at the virtual Jackson Hole Symposium, right? And we do have some volatility. Well, obviously, we have some movement here on the Euro USD, which is primarily coming from the actual US dollar, right? If we take a look real quick, we can see that the dollar has hit the low of that consolidation that we were talking about earlier this week, which is quite interesting, right? So I don't know if you guys remember, but me and Kyler, we put out a piece where we basically said, hey, we would love for markets to stay inside of this range and potentially break back to the upside. But as we know, the Fed has been very, very bearish on the whole idea of raising rates. And what they've been saying is there's nothing that's going to happen. There's nothing that could be done in regards to them starting to increase rates, right? And which is interesting because yesterday there was actually an enormous bond auction for 5-year treasuries, and it actually ended up doing quite well. I'll post a link below to basically why or how that went about. But long story short, there's not a real demand for currency because there's no yield. Basically, if you store your capital in the US, in the USD, right? I mean, look at the interest rates. The interest rates have been falling, right, month after month, especially since COVID, and you're just not going to get any return on your money. Okay, so what that means is people are going to continue selling the dollar and moving over here to the S&P. And so what do we have happening? It's falling and falling, falling, and now hitting an all-time low for 2020. Okay, so yes, our initial buy idea for the dollar and our sell idea for the euro, it's actually interesting as to how it's working out, because if we go over to the euro is actually doing exactly what we wanted it to. Okay, so I'm going to roll a quick snippet here, and I'm going to show you guys exactly what we wanted to see on the euro, and then we'll roll it again as well, and I'll show you guys what we were talking about on the USD. Remember, this is our euro index. I'm rolling a clip on what we were talking about in regards to what we wanted to see on the euro index. Take a look. Have an innate bias to sell the dollar, while we right now have an innate bias to buy the dollar. But that's how that's the game you're playing, right? That's how markets function. Okay, obviously there's counterparty risk with the dollar. We want that dollar to break out of that consolidated area that I showed you guys just a second ago. We'll run back to it. Okay, so yes, we want the dollar to break outside of this very tight little consolidation down here, push that back to the upside. But at the same time, we still are facing certain things happening over in Europe. We will want Europe, as Kyler mentioned, we want to see a little bit more risk coming into the euro area. What that would do is that would drive, this is our euro index, by the way. That would drive the euro back sell side, which is something that's pretty cool. Pretty simple trade, and that's the end of that. Okay, so guys, you can see the euro is actually working out. Okay, it's working out and it's pulling back down into structure. We knew that it was holding a high that really couldn't be well substantiated based off of the fundamentals. Okay, and so now we should start to see this market revert back towards the mean. I was talking about the strategy that we traded yesterday in the video where we mentioned, hey, how to become consistent. Take a look at that video. It'll also be in the link, or I'll just tag it up here as well. All right, so this entire price move we saw on the euro happened because of Euro's stimulus plan. All right, what this basically meant was, hey, we should start to see a little bit more certainty that, hey, we're de-risking the euro. Yes, they're printing money, but at the end of the day, people were hoping, or market participants were hoping, that we would start to stir a little bit more monetary velocity with this money printing here. But guys, this is inflation, right? And so you can't really have a leg up when you have more capital flow, when you have more money going into the system. Okay, so that's why we really are seeing this pullback here on the euro. Now, again, sadly, it's coinciding right now with a fall on the dollar, and that's exactly why our euro USD, okay, usually I'll go to Thinkorswim, but I'll just go to it right here for you guys. That's why our euro USD is still stuck in this consolidation. This down move we see happening right here on the euro USD, thankfully, is being aided by the euro. But the reason it's not really moving the way we need it to is because of, again, that dollar is stifling the sell side move. And if we pull back, let me get off a daily and show you guys what we're looking like on the 4-hour. What you guys will see is a massive spike, an absolutely massive spike to the 1900s. This potentially triggered a lot of traders out of the position. Okay, it potentially did, but this doesn't mean that the trade is over, right? Because at the end of the day, this is all just volatility, right? This isn't momentum. So we just have to keep an eye on what's happening here in markets. Of course, you know, again, we would regret, or we would not want to see markets sustain past these 1850 numbers here, something we've been talking about in the community all week long. Okay, we would hate to see markets sustain and push outside of the 1850s. We want to see them break back down into structure and break outside of this 1750 area, because that's just going to give us the trade that we're looking for. It's happening for the euro. Okay, again, it's happening for the euro. We're breaking outside of that higher consolidation. It's not happening for the dollar. Okay, and again, that's why we're tied up. This is why economic divergence and understanding what's happening in all the currencies pairs are so important. So let me know what you guys think about what is happening right now with the Jackson Hole Symposium. Okay, are we going to raise rates at some point? Again, I don't think we're going to raise rates until at least 2022, summer 2022. Probably not until really spring 2023. Okay, so a long time with zero yield. That is going to potentially push stocks higher because capital flow, that cash has to go somewhere. Okay, and it's probably going to go over here into the stock market. It may go into certain things like real estate. Who knows? Okay, so guys, let me know what you think as to where this is going to go. Again, this is a short-term micro opportunity in a macro market. We want to take advantage of all this news that's coming out, but it would require for this dollar to push a little bit to the upside. Now, last thing I'll say is we would need to see a little bit more risk come into the overall marketplace, and that's what we're going to be looking at. And we're going to be talking about any kind of event that comes into market that is, again, risk-based. We're going to be talking about it here on the channel. All right, so guys, make sure you guys are subscribed. I don't know how many of you guys have your post notifications on, but turn them on because we come out with breaking information like this all the time. All right, and again, I want to know what your comments are on where you guys think this Euro U is going to go, so on and so forth. Okay, guys, trade safe. Talk to you guys soon.